Hey guys, how are you? Welcome to the video. So it's going to be a little trade review for today. So I had two trades today and let's go over them. So I'll start off by showing you my trade log here. So the first trade was on some 302 puts on SPY expiring tomorrow. Today's Tuesday, so there's no option expiry today. So I picked them up around 10 o'clock and I got out of them at 10:20 for a loss. So basically when I got into the trade, I had a defined area where I knew I was going to be out of the trade if it got there, and it traded there and I got out. So that's it. I even put in the conditional order to get out. It was basically the stop loss. So after that, I had another trade that I'd put on later in the day, and this trade was a different kind of trade, and I'll explain it to you. So you can see here that I sold the 309 calls expiring tomorrow, and I bought this 311 call. So that's called a spread right there. That's a call credit spread. And that trade is still in play right now. And in fact, I'm most likely going to hold it overnight tonight, depending on where the market closes. Now, obviously, I know that there's overnight gap risk, but this 309 is further enough that there might be enough margin for error for me to hold it overnight. So that's pretty much it. So let's get into it right here. So this was the trade that I had originally planned on taking. So you can see that we were fading going into the morning session off of the overnight rally. We initially moved lower to start the session, and we had this thing where we were making lower lows with not much follow through. So that could have been a signal for a long, but at the same time it was a trap because we got a big flush after that. After this second leg flush, look at what happened. We had a little bit of a retrace and then another attempt to move lower, wasn't able to. The NASDAQ held the bid and had that pattern where it broke through a lower low with no follow through. Healthcare sector also catching a bid off of that sell-off. Okay, so there was some buying after these two legs down here. There was some general buying. So now when I saw this move coming back up here, I was using the previous trend as a reference point, saying that I'm going to scale into a short here with 307 as my stop, and basically it was 306.84, which would have been the high of 2 sessions ago, and I was using that level as a general stop. So now looking at it in hindsight, I can see that that level was actually a little bit obvious. It was the high of 3 sessions ago, and that level got tested, right? So I was scaling in short right here, buying a put on the offers, and my profit target was going to be, around 305-ish, and what happened was we consolidated, and then we had the bulls coming to push this up above 306.85. So that right there stopped me out. I stopped out of the trade, right? I had the order in and everything. It stopped out. I didn't wait around. Now, going into today morning, I actually had another trade planned that if SPY was going to see a considerable rally, I was going to likely be selling some calls because there was a key level I was looking at on the daily chart, and that level was here. This resistance, 308.47, 308.50 basically, and then after that we've got 313.10. So 308.50 is the nearest daily chart resistance, and based on how extended we are, we're still kind of grinding in this rally. I wanted to make a trade based on that, so I sold some 309 calls. So I managed to sell them right around here. 10:25 was when I was selling those calls. So after we pushed above 307, you can see there were a couple of attempts to keep pushing this price up. And you can see that it was in sort of squeeze mode here, that squeeze price action type of thing, getting a little bit extended. And then we sold off initially back down to the support that was previous resistance. And I want you to take a look at how SPY reacted. You can see we're seeing a couple of these lower wicks here bounce, and then another bounce right there. And then it finally rolled over the third time. Okay, so this could have set up a bit of a long trap right there where you're seeing bounce off the support, trying to get traders long, and then all of a sudden you get a massive sell-off. You have no chance to, recover. If you took a long position up here, you really have to get out on the bids. You have no opportunity whatsoever. So they just kept smashing those bids down here and trapped out some long traders here. Nice sort of setup, and you can see how aggressive that move was. A little bit of a bounce here right to the moving average, which resulted in a quick another leg down to about 305 or so. And 305, massive support here. Previous resistance around that 305 area, now acting as support. And you can see that the market is rallying off of that level. So we'll see what happens going into the close here. But my 309 calls are so far protected and in the green. So generally, I'm most likely going to be holding these calls overnight, depending on where SPY closes today. Now, if I have an opportunity to close out of the position for buying back the contract for near worthless, then I will do that, because obviously the risk to reward at that point will have gradually shifted, right? Because once the contract gets cheap enough, then the risk is much higher. The gamma risk obviously is that we get huge gap risk. Whereas if the contract is still having a lot of time value, then obviously the reward is still better than the risk in the trade, obviously. Okay. So taking a look at the NASDAQ, you can see that we're still maintaining these higher lows here. Now, generally, I was watching the 4-hour uptrend at the beginning of this week. You can see 4-hour higher lows, and you can see the next one in play here would be 94.85. This was the higher low that had formed after this futures trading started, okay? So again, this was the trading range here, low, higher low, and then it broke bullish, and now we're back into the trading range. So if anybody got long here, they're kind of trapped now, and we might go back to test these supports to see if there's buyers down there. Looking at the tech names, generally, I'm looking at this sort of trading range. And you can see this hourly trading range that Apple has been in now for multiple sessions, the high being 324.24 and 313 as a low. And you can see that we're in this pattern sort of tightening up, so there's a lack of volatility right now. Looking at Microsoft, there's also a bit of a trading range going on here where obviously there's a broader trading range, but then there's this smaller trading range within the trading range. So we're still in that right now, and I'm going to be keeping an eye on this pattern to eventually break in whichever direction. Amazon is one of the stronger names in a daily trading range. So it's in an hourly uptrend, but again, approaching key resistance not far away. Google also in somewhat of a hourly trading range. You can see high, low, kind of a double top, and then making higher lows. So definitely going to keep an eye on these trading ranges that are occurring. Facebook with another example, Berkshire Hathaway as well with another example. So there's a lot of trading ranges around the market. I said that word at least 6 times in the video. So as long as there's trading range price action, option premium will continue to decay. So be careful if you're long out of the money calls or puts, because there's a lot of decay there. All right, guys. So see you in the next video. I wish you all the best. Take care. Manage your risk. Bye.